Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is take a look at the equity markets. The equity markets continue to digest gains. Basically, for the last 6 weeks, equity markets have been moving sideways. They haven't fallen apart and they haven't broken into new highs, except of course for the NASDAQ. The NASDAQ keeps hitting new highs. So let's take a look at the specific indices. So the Dow still has resistance at 20,000, hasn't been able to cross that mark, but hasn't fallen apart either. It's just moved sideways, showing support probably right about that 19,500, 19,400 level. So as long as it holds those levels, the market should be okay. And the S&P 500, another round number, can't get through the 2,300 level, but staying above support right at about 2,230. So not until the S&P breaks down below there, we maybe change our view that the market is kind of breaking down. But quite frankly, it's just digesting its recent gains, moving sideways. Now, as I mentioned, the NASDAQ keeps hitting new highs. Now, the Russell 2000, the small cap index, right at support at its 50-day moving average, has been the weaker player recently. It's been trailing off, but again, still hasn't collapsed. And at the same time, the transportation sector, which is a very important sector, continues to improve. Now, looking at the leadership groups in this market, still continues to be financials, although a lot of them have corrected and they're all bouncing off their 50-day moving average, so that's very constructive. Technology has been very strong, specifically the semiconductor industry. That's been doing very well. That continues to hit new highs. Stocks in that group are stocks like Skyworks Solutions, Broadcom. Those are pretty much hitting new highs, Micro Semiconductor. And then other technology stocks like Adobe's breaking out this morning, Monolithic Power, another semiconductor, right, the breakout point. And also we see strength in the old FANG stocks. Facebook's acting very well near a pivot point. Amazon's acting very strong, trying to regain its recent highs, also at a pivot. Apple recently broke out, moving well, and Google again is at the pivot. So a lot of stocks acting very strong. Netflix hitting new highs. So that's bodes good for the market. And also we continue to see breadth's very positive. So not until we see a breakdown in these groups or these groups start falling apart will we tend to think that the market's losing its steam. Right now it's just consolidating its gains, which is very positive. Industrials are acting very well. We do continue to see weakness in the utilities, staples, although staples are improving, and healthcare. Healthcare is probably the biggest lagging sector in this recent market, so that's something to keep an eye out. We're looking to see if that can improve any, but right now it's not looking that good. So, in summary, take a look at the support levels. If you're going to make any plays, you want to look at the leading groups that I've mentioned. And also, just a full disclaimer, some of the stocks I did mention, we do own. However, none of these are buy recommendation. You should always consult your financial advisors to see if any of these trades are for you. So, as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.